Hey kings and queens, Sandra Family here, your mortgage consultant. How y'all doing? Don't I look excited? I'm excited because we have a new program, hot off the presses. I printed it out so I can make sure I touch all the points. Now, let's talk about second mortgages. Now, we know we are in a refi era, right? If you bought your house 2, 3, 4 years ago, it is time to refinance because the rates are going down. So, if you are in a special circumstance, like you're self-employed, you have investment properties, and you've had a hard time getting a traditional loan, then this is the product for you. I'm excited. So let me go over real quick. Non-QM versus QM. A QM is a qualified mortgage. That's like your regular mortgage, your FHA, VA, USDA, conventional, right? That's a QM loan. And then you have your non-QM loan. So that's like your bank statements, profit and loss, 1099 only, all of those types of loans that are outside of the box for people who don't have traditional 40-hour-a-week income, right? So now guess what? You can get a second mortgage. You can get a second mortgage, which is like a HELOC. It's not a line of credit, but you can pull money out of your house or out of your property without touching your first mortgage. So if you were one of those lucky ones that got a 2.99%, 3% interest rate, then you can use this program to be able to take money out your house. It will just be a second mortgage that's attached to your first mortgage, but it allows you to get done what you need to get done. Isn't that amazing? All right, so let's go over the key points real quick. Credit score down to 660, loan amount up to 750. You can do a 3 or 12-month bank statement. So what does that mean? Bank statement loans. Instead of us looking at your traditional pay stubs, if you have a business and you're depositing money into your account, we can average out those deposits between 3 and 12 months and use that as your income. Yes, we can. And then you can do a profit and loss loan. If you have a licensed certified public accountant, CPA, they provide you with a profit and loss, and we can use that as your income. And then you can do a DSCR, debt service coverage ratio. That's where you have a rental property and we're using your rent as your income. So as long as the rent that you're receiving on that property covers your payment, then you would qualify for this. So the rent will be your income. And then you could do a 1099 only. So if you're a contracted employee that you get paid per commission or 1099, we can use your 1099. We can do a written VOE. A VOE is a verification of employment. So we can get your job to write the verification of employment and tell us what you make. And then we can do an asset depletion, which means that you have a lot of assets, but you don't have a set source of income. So we can use those assets as your income. And then we can do 1 year self-employed. So you don't need a 2-year history. You just need 1 year of self-employed history. These can be owner-occupied, non-owner occupied, which means that you own it, you live in it, or it could be you don't own it, you don't live in it, or it could be a second house that you can use this second mortgage on. And we go up to 85% combined loan to value. So what does that mean? Long as what you owe on your first mortgage and your second mortgage added up don't go over 85% of your home value, you will qualify for this. And then they have terms to repay 10, 20, and 30-year fixed rates. So this is amazing. It's eligible on non-warrantable condos. This is a great program, guys. If you have more questions about this, please let me know. If you were just looking for ways to pull some money out your house, but you didn't know how you would do it because you don't have traditional income, you gotta wait now. Call me. You can call me at 301-965-1155. You can start your application today at approvemesandra.com. You can comment or you can inbox me on any of my social media platforms. Thank you guys for watching. Have a good one. Bye.